All right, what's up everyone? Welcome back here for another recap video. It has been a while since I have filmed a recap video, but I can show you guys what has been going on recently with my trading results. So this is April. This is April here. So, pretty decent April. I finished up about 7,500 in April. And then towards the tail end of April, it started to slow down, or maybe not slow down, but my performance has been slowing down. I think the quality of gappers have definitely taken a hit since the middle of April. I have not been performing as well, but trying to stay alive is kind of my main goal right now. Sideways is fine, small red is fine, green is terrific, but the only thing I don't want is to be red, to be deep red, to be digging a huge hole. Because whenever I dig a huge hole, my confidence takes a hit. And yeah, I don't want that to happen. I want to, stay composed, keep my confidence intact, so that when the hot market does come, I am ready to attack. I'm ready to attack, and I'm adding profits on top of my cumulative P&L versus making losses back. So towards the tail end of April, started to slow down for me a little bit, and having some smaller green days, a couple red days, and one red day there at the end of the month. And then coming into May, I just completely like we had some decent action here on Thursday and Friday, but I just couldn't capitalize. We had BenF, we had SGBX, we had a couple other stocks that were decent price range, but the price action, I was struggling. I was struggling on the price action. Very hard to hyper scalp. I was having struggles hyper scalping. For those of you who have a little bit of a longer hold time, I'm sure you did very well, because a lot of these stocks did have a very nice front side move. But the backside always came kind of quick too. Backside came kind of quick. So, buying dips didn't favor me very well on Thursday and Friday on May, or even the first week of May at all. So ending the first week of May only up like flat, maybe $200. I think maybe $200 in the first week of May, or last 2 days of April, first 3 days of May. And coming into this week, small green on Monday, small green on Tuesday, which is today, up about 140 on Monday, and Tuesday today, which is up to 32. So small green days, which is fine. I don't think today had all that great price action. We did have some sporadic momentum here and there, but for the most part, very risky stuff. Very risky stuff for the most part. So you can take a look. I definitely decreased my size significantly since I started to notice I wasn't performing as well, which is good. If I can stay in tune with my performance, with the current market, if I'm not performing as well, I got to be able to take those signals, take those signs, and size down, manage my risk until I start to see signs that I'm performing to a sizable, to a good quality, My quality control right now, I'm in quality control. So until I start seeing some bigger winners, some better risk management as far as risk to reward ratio on some of these setups, I'm gonna want to keep it tight. So Monday, look at my accuracy, 44%, 44% accuracy yesterday, but I'm still green because I'm able to keep my losses tight. So 1 to 1.5 risk reward, 44% accuracy. I was able to keep some profit in my pocket, a nice Benjamin in my pocket from yesterday. Average position cost, so sub $1,000 position sizes, is crazy small. This is what I was doing like 2 years ago. Yeah, this is the type of size I was doing 2 years ago. So taking a step back for the sake of taking 2 steps forward when the market turns around. Because the one thing I don't want to do is keep my size high or even pushing size when the market, and I'm not performing well and the market's not giving me what I want, and I'm digging a hole, and I'm digging a hole deeper and deeper, and then my confidence goes into the shitter, and I am, when the market does turn around, I'm spending 2 or 3 days of a hot market trying to make losses back, which I don't want, So I'm fine, keeping my size tight until we see some better action. I just can't let it. It has nothing to do with has more to do with my risk management skills than it does have to do with my actual performance as far as who I am as a trader. That's what I'm trying to mean. So you gotta put your ego aside every now and then and size down a little bit so you can ensure longevity. And look here again today, 44% accuracy. That's terrible. This is well below my target. 44% accuracy. This is why I can't size up. If I have a 40% accuracy, it's obvious. It's obvious that the signals are there, and I'm noticing that I'm not performing as well. With the 44% accuracy, I can tell. I can definitely tell. I'm just not having as many winners. If I'm not having as many winners, I can definitely notice that. Size down a little bit until I start to get that accuracy back. And then once I get that accuracy back, my confidence is gonna be there also. So I was able to keep my losses tight today. My largest loss only $20, but my average position cost $632. $632. This is like micro size. For me, this is micro size. This is like what beginner traders use. So, putting my ego aside, sizing down for the sake of longevity, and I'm able to still pull out $225, which is actually pretty good. Pretty good, honestly. Very nice risk to reward, keeping those losses tight. Accuracy is suffering, but keeping the losses tight and still able to pull out $225. So, not terrible statistics, but the accuracy is definitely making me a little bit less confident in putting on size. So hopefully, we do see some better action, more consistent action, and action where, I'm confident, more, I'd say confidence in being able to get out, or I want to get out. A lot of this action today, past 2 weeks, has been like, you don't know where you're getting out half the time, because the spread is wide. The stocks are very thin. It's easy to get caught in flushes. And so while you may think you may only be risking 5 cents on a breakout, let's say here, okay, it's buy the dip here at 258. Okay, I'm going to stop out here at 250. My stop is 250. I may, in my mind, be like, all right, I'm taking an 8-cent risk, looking for the highs here. All right, we break out. Okay, maybe let's add for the 1-minute new high. We're looking for the push up to 290. And we're thinking this is a normal trade. Most momentum traders would take this setup, looks good on the 5-minute, curling up. Maybe we squeeze out. This definitely has a good potential of squeezing out of 290. So getting in on the dip, adding on the 1-minute new high, looking for the squeeze. Next minute candle. You think you're risking the low of the pullback of 256, 255, maybe 250 at worst case scenario, and it completely the bids just fall out, and before you know it, you see a bid at like 225, 220, and of course you're selling market at 220, 225, and so while you thought you were only risking 5 cents or 10 cents at worst case scenario, you risk 50 cents or 40 cents. You risk 35, 40 cents. And that's been the theme of the past 2 weeks. Is like I don't have confidence. I don't have confidence that I'm able to get out at the price that I want to get out, which increases my risk and ruins the profit potential or holding on to gains, even just holding on to gains, period. Holding on to gains. So that's why a lot of the times, the past 2 weeks I've just been, green, okay, give it back. Green, okay, give it back. And then back to red. And then green. And then back to red. It was just a lot of that type of action. So what else do we have today? We can just take a look here at our gappers. CMND was the one that did the best on, and that was just the opening range dip. I bought the opening range dip here, the pullback, and then maybe sold for like a 5-cent gain on like 3K shares. I think that was it. I was like 3K shares on the dip. I thought I had a really good potential for that red to green, like we were saying on the pre-market pump for our pre-market live stream from 9 to 9:30 a.m. I was like this, we had this nice wedge here. I was thinking maybe we do a little bear trap. So we dip down and we curl up and rip through the highs. That's what I was really looking for. So I sized in here in the dip, looking for that reclaim. We started to get the reclaim. I just, I took my 5 cents. So I was like, you know what? Like, if it's going to go, then maybe I'll buy again up here at 175. But I don't want to risk this failing because just nothing's been really working. At least the setups that I've been working early last month in February and March, those setups are not working as well. So we have to adjust. We have to adapt. The next stock was a GSUN. Maybe GSUN. This one I didn't trade. I was busy trading. I think I was busy trading backside actually on CMND. I was like trying to scalp the backside. It was break even. But GSUN was tricky. I knew there was a large spread on it, but I kind of let this one go without me. The next one, News, NUZE. This one, another widespread stock. For a $2 stock, this thing had a 15-cent spread. So you're risking 7 cents potentially for sending a market order, which is crazy. And even I was using a 3-cent offset on the bid. I was buying bids with a 3-cent offset, and even when I was buying the dips, I would get filled 3 cents over the bid, and the bid would never come up. The bid would never come up. It's like trying to scalp the dips were not working for me either. I'd buy the bid plus a 3-cent, so I was risking I was getting filled over 3 cents over the bid. And the bid, even off the bid, it just would not come up for me to even scalp it for a couple cents, which is stressful. And then I would sell market to get out, and I would just lose 3 cents. So that's kind of how today was. NUZE, yeah. So this one, nice run up here, pullback. Very extended pullback, crazy pullback, all the way from 260 all the way back down to 206, and then back up to 280. I kind of like that we see that volatility, but it's very hard to capture. Very hard to capture. What else do we have here? Let's see. We had that one stock that was like 200 million share float, MTC. 200 million share float. This thing was bananas. I was surprised that we just went parabolic for 3 minutes. We did have a 10-minute halt actually. So we ripped up and completely got caught off guard. I was like waiting for a bigger consolidation in this area. I didn't think it would just rip straight up. And we ripped straight up on a 200 million share float, which is absolutely insanity. We rip up, and I'm like, all right, maybe, I'm waiting for that pullback because it's a 200 million share float. We gotta see some sort of pullback, right? And then we halt up, we open, resume higher, waiting for a dip and rip. Okay, we dip maybe 5 cents after a $1.20 run on a 200 million share float. I'm waiting for like a decent dip, maybe a 50-cent dip. It's got a lot of supply. We should see some sort of at least dip here at the resumption, but we didn't get a significant dip enough, and I let it go. And I tried getting in here off this dip, and adding trying to get that next run higher, and we failed, man. We failed. This one, I think I'm only small green on. Yeah, what am I at? $86. And then here, trying to get in on this dip here, looking for the next leg here in a 1 minute, or at least for the 5 minute candle to make a new high. Because once we if we broke back over this pivot point, if I could kind of start a position off the low, that's what I was thinking. Start a position off the low, maybe we see a higher low here, and then looking to add for the break of the pivot for another run higher, because we did see crazy volume, and usually the first pullback is most likely as the highest chance to work the first pullback. So this would still be considered the first pullback, if it did turn out to be a bigger move. So that's why I was really kind of trying to size in. So maybe I was trying to get like a position here off of 4, and then maybe add for the 1 minute new high and then the 5 minute new high, looking for a bigger move. But we never got it. So the action kind of just pump and dump here on a MTC, and yeah, 86 bucks on that one, and then small green on FGN. Yeah, this one was, I think I was just scalping it on the front side, and then I was looking for the pullback and then maybe for the break of the pre-market high. But this is similar to that stock TCBP, actually. Just a double top at the high and then a fade. This was even more of a disaster. It is easy to borrow, so you could tell lots of shorting going on in here, which I should have just, honestly, I should have just shorted this and just held it. But yeah, it would have been up like, what, 50 cents, 40 cents a share. But this one didn't really offer much either. So very tough action. I'm going to hold on to my $232. I think that's a win for today. Small green is great. It's fine. I'm happy with that. Longevity is key. Longevity is a key. We worked so hard in January, in February, in March, in April. We worked so hard with a decent market through those months. Now that it's getting slow, or it's getting choppy, or it's getting harder to trade, for some of you guys, of course, it's not okay to give back all that hard work. It's not okay. We have to learn to adapt. We have to manage our risk. Can't allow ourselves to get into, a drawdown to where we're giving back weeks of profit. That's why I advocate max loss of only one average green day. So in this case, my max loss, for the next, until we start seeing a better momentum, my max loss is going to be, what, $200, 300, maybe $300. I'll give it an extra $100. For at this point in my career, a plus or minus 100 is nothing. It's scratch trade. It's just like, I don't even notice it anymore. So $250, $300 right now is my max loss, because I have a $200 green day, $140, $230 green day. So I really don't want to lose more than one of those types of green days. So $250, it would be a good kind of area for me to be like, you know what, like, it's not worth it. So, but right now, strict max loss of $250, because I don't want to allow myself to go into a drawdown. Because if I'm only having $200 green days on an okay day, then, like, if I have a day where I lose like $1,000 or $1,500, it's like, that doesn't make sense. For the risk reward situation, it doesn't make sense. Back here, let's say, we're trading again back here in, let's say, February, I'm having consistent $3,000, $1,000, $1,200, $1,000, $1,600. Okay, if I lose $1,500 in one day, that's fine, because the market was giving that type of opportunity that I was performing well on. And so it makes sense that I risk more in order to make that level of profit, in order to make $1,500 or $2,000. So the risk to reward is there, because you're risking that to potentially have a 2K or 3K day. So, in that case, it's okay to have a $1,500 red day. There's no sweat. There's no sweat. But if you have a 1,500, did I say 15K? I mean 1,500. But if I have a $1,500 red day here, it's like the risk to reward doesn't make sense, because the action that is giving me, it's the chances of me getting up to 1,500 is not a lot. It's probably not a lot, at least right now. So it wouldn't make sense for me to be down 1,500, is what I'm trying to get at. So that's sort of my strategy with risk management. And I know a lot of people, they applaud me for my risk management skills, and I'm able to avoid a lot of huge drawdowns, and I'm able to keep my losses tight. And that's really the crux of my risk management philosophy. And that's just recent market, your average green day of the most recent market. Maybe it's, the past 2 weeks, your average green day. So, for me, keeping it tight, max loss is 250 and still until the market starts heating up. So that's sort of my plan here moving forward. Hopefully you guys got some value. It's been a while since I made a recap, but I'm still alive. I'm still kicking, just kind of going sideways. So not really much to really recap the past 2 weeks other than my own frustration. So I didn't really want to post a bunch of negativity on my YouTube channel, and I didn't want to have a lot of videos that just said flat, flat every video. So kind of just been laying off the YouTube videos for now, and kind of just I've been studying, but focusing also on other things as well, and kind of just using this time as to take care of my mental health rather than focusing on the market all day. Maybe going for walks, doing other things, spending time with family. To kind of keep my mind off the market until it starts heating up, because there's no really point in obsessing about the market when the market is in a current state where if you're not performing, I mean, yeah, you can do your study time, but I think it's more important also to make sure that your head is screwed on tight. Screwed on right. You don't want to be so obsessed to where now you're so anxious and so stressed, because that can bleed into capitulating and doing emotional trading. So obviously there's a healthy boundary between studying and obsessing. So just got to find that balance. Obviously you got to put in that time, but what I'm trying to say is don't over obsess about it, because the market's always changing, and the market will come back to where it's giving that proper opportunity that you enjoy, that you like, that you perform well on. It's just a matter of being patient, and it's really a long-term thing. It's really a long-term thing, because when the market's really there, let's say you get a couple good months of like really hot momentum, like what we'd see in like 2021 or even February was nice. You can make like 3 months worth of profit, 4 months worth of profit in just a normal or cold market. So you just gotta wait for that time. And then once you get confident, you can go farther than that. You can make like a year's worth of profit in like 1 to 2 months on a really hot market. And really, you only got to get rich once. You only have to get rich once. So you got to be there and survive until that moment, so you can get to that point. Don't want to strike out before that. You only got to get rich once, and then you can live off the dividends for the rest of your life, as long as you don't do anything stupid and bet it all on green or red on the roulette table, or on craps or blackjack, or I guess on some pump and dump penny stock. So I'm going to stop rambling here. Hopefully you guys enjoyed this video. If you did, hit that thumbs up button for me. And if you're new, consider subscribing. I'd love to have you a part of the community. You can check out also the links down in the description. And I'll catch you guys tomorrow. Peace.